Welcome to Ticker Talk. I'm Ted Ohashi, coming to you today from the offices of InvestmentPitch in Vancouver, British Columbia. I'm pleased to have with me David Morgan, founder of the Morgan Report, an acknowledged expert on all things silver. Welcome, David.
Ted, great to be with you.
The last 3 or 4 months have been tumultuous in the precious metals markets. Why don't you give us an overview of what you think's been going on?
It's quite an order, Ted. What's been going on is, I'd say, first I'm going to talk technically. What we saw in the gold market was resistance at about the 1550 level. So gold had tested that level several times and was holding that level. And silver was doing about the 26 level and it was holding that level as well. And early in the year, there was this big hoopla that I was one of the proponents of about Germany asking the Federal Reserve Bank of New York to return their gold, their physical gold. And basically the New York Fed blew them off and said, well, yeah, we'll give it back to you about 7 years from now. And I said, this is preposterous. If they had the gold, they could get it back in a matter of a few weeks. And so that, to me, fundamentally was a massive change in the gold market. So I thought from a fundamental perspective that the 1550 level would hold in gold and probably the $26 level would hold in silver. And as time went on, we saw more fundamental anecdotal evidence that there was more and more problem getting physical gold deliveries in a timely manner. Well, what happened very recently was that the markets broke down from that technical support. On the 12th of April and the 15th of April, we saw this massive sell-off in the what we call the aftermarket or the very quiet markets in the Asian time frame, and massive amounts of selling on paper. And we saw both gold breach the 1550 level and silver breach the 26 level, and what I call waterfall decline. And that's basically where we're at now. We're starting to build back up. So I think there's two questions that go on here. One is, has anything fundamentally changed in the gold or silver market? And the answer is a resounding no. It really hasn't. Although you hear a lot of talk about the price action, what you don't hear a lot about unless you go to the internet and get alternative news is the amount of people that are lining up block after block to buy physical gold. So I don't know how many people are in those lines with their Krugerrands that can hardly wait to sell them at these levels. No one. There's more buying, not selling. Now, being fair on the sales side, there's probably sales going on in the physical market from the ETFs. But these guys do not have a fundamental belief in what's going on in the global financial picture. They're after the quick buck. So they're very willing to sell their paper gold and perhaps some physical gold to move it in the stock market because of one thing, and that is it's moving. So they're looking for something very quick. So fundamentally, I think there's probably never been a better time to buy gold or silver. I think it's really at a discount relative to the fundamental value. And yet, again, the mainstream media is going to focus on one thing, and that's the price or the technical breakdown.
And isn't it even a case of, is that really the price? Because the paper market in gold and silver is so much bigger than the physical market, and that's where all the speculation is taking place. And so the ups and downs are really led by the paper market, not by the physical market.
Absolutely true. I think I was asked to write a piece on, the markets, particularly gold, and how the markets operate way back in the early 2000s. When I said in that little blurb was that for a very long time, the market does not care if the sale is on paper or physical, but a very long time isn't forever. And that's where we've already witnessed right now. What we're seeing, the physical price for gold and silver particularly is higher than the paper price. And we saw that in the 2008 financial crisis. Now that doesn't mean, one, you could arbitrage it, that's an availability. Two, I think the price will narrow, and I think it will come back more toward the paper price. I think there's probably enough physical commercial bars in both the gold and the silver side to narrow the price spread that we're witnessing now. Nonetheless, the day of reckoning is ahead of us, and it may already be here. No one knows. Particularly in gold, I think there's more evidence out there in gold that you cannot get physical. You have this bank, this Dutch bank that had physical gold, and they've told all of their holders that no, you got to settle in cash. A lot of other anecdotal evidence not being able to get physical gold out of Switzerland and this type of thing. So these markets are oversold, and the only way you can oversell them is by issuing paper or giving a receipt for physical gold that may not exist, or physical gold that does exist. For example, in some of the ETFs, that's been rehypothecated, which is a fancy word to say sold, pledged, swapped, leased, or some other derivative has been placed upon that gold bar maybe one extra time, 2 extra times, 10 extra times, 100 extra times. We don't really know. What we do know that if you put all the paper on one side of the line and all the physical on the other side of the line, they wouldn't match. There'd be a mismatch of at least 10 to 1 and probably more like 100 to 1. So this is the reality of the physical market. Unfortunately, because the whole system is based upon electronic trading and what we call the paper markets, but it's really electronic, is that a lot can go on for a very long time. And let's be realistic. If you're a fund manager and you believe in the physical story and you own physical gold, when you get a redemption, what do? You don't send them the gold. You cash out the fund, you sell physical gold into the market, you get a check and you forward a check on to the redemption. So that's the reality of the market. But again, I want to emphasize that I think the day of reckoning is coming. I think it may not be in 2013, but I think 2014 you're going to see this market reassert itself in a significant way.
And isn't it also the case that there's some question as to what amount of gold or silver the U.S. actually has? I mean, there hasn't been an audit for decades. And so how does anybody know any of that?
They really don't. I mean, you get Jeff Christian, and Jeff, we ask him to the Silver Summit every year. And every year there's an audit, quote unquote, and put in quotation marks for a reason, an audit is done. And all it is a line item on a piece of paper. I could say I've got $2 billion worth of silver, and put it on a piece of paper and put it on the internet. Does that mean I really own it? No, it's ridiculous. That's my perspective. Jeff can hold his own beliefs. But no, there's not been a physical audit of the gold inventory at Fort Knox since the 50s. And
yeah.
even so is it there or not? There's arguments on both sides. I lean to the idea, and some call it conspiracy, that if you show me, don't tell me. If you've got it, what's the big problem? Show it to me.
Right.
So I'm on the side more or less that it's probably not there, or at least not in the quantity. I wouldn't say it's all gone, probably not in the quantity. And then there was a blurb I saw recently on the internet of one of the Federal Reserve members saying, "Oh, we don't own any gold." And I wish I had saved that video, but I really doubt that the 265 million ounces that the Treasury reports every year that they own is really owned free and clear by the U.S. Treasury. I doubt that highly.
Right. So you're still fundamentally optimistic about silver prices, gold prices. When we talked last, you were also even more optimistic about gold and silver stocks. And I think in the past 3 or 4 months, that view has been proven correct in many cases, because although the metals have gone down a lot, some of the stocks have performed relatively well.
Well, thanks for saying that. I mean, I could pick and choose and make that case. I mean, you can make both cases. It just depends on which one. I look at an individual basis. But if you look at the list that are in the Morgan report, many of them have not gone below the May bottom that I called the bottom in the mining equities. And I was wrong. The mining equities on a indexed basis, like the HUI or the XAU or the GDX, are lower. But if you go on our list, I'm not saying in every case, but in several cases, they've actually not gone lower than that. And some have come up. We specialize in trying to find value at all levels. And we break it down in top tier, mid tier, and speculations. And even our speculations, by a lot of my friends here in Vancouver that are very familiar with the penny stock market, call my speculations blue chips, because a lot of them are producers or near producers. Nonetheless, yes, some have maintained and are coming up, but the overall market now, it's trending down still. And the market really is at a point, I think, where we've reached capitulation. I mean, I think a lot of people pretty much that want to give up have given up. And at this point in time, I think it's only the true believers, people, in my perspective, that really understand the big macro picture that won't sell out. And it's not because they're stubborn, it's because they understand that these are bargains. This is not a time to get out. This is a time to basically buy back into the market if you're a trader, or if you're not, to add your position. And if you can't, garner any more cash, just to hold what you have.
So if we look at your letter and the stocks that are there, I mean, there are some common characteristics. I mean, you like producers, you like expanding reserves, you like financial strength, cash, and cash flow. Are those the things that you think you should look for if you're looking at a silver stock today?
Yeah, silver stock, we do more than that. I mean, one of the misnomers about the Morgan Report is silver focused only. Although we spend most of our time in the silver space, we certainly look outside of that. We have a drilling company, we've done copper, moly, we've done, even had a uranium company one time, actually sold that one out near the top. But nonetheless, yeah, we look for value. We look for who's producing, and we do a lot of royalty companies. I mean, I'm not ashamed of that. I mean, we look to make money. And these royalty companies have a very big advantage in a market like this. They've got a cash flow or royalty stream based on a set price in the silver or gold market, for example. So it's unfortunate that maybe one of the people that they have a contract with's price is going down, but their price is set. So their margins stay very robust. So you've seen, these type of companies, we have several of them, that are actually maintaining they're doing quite well. And we've thought that through. Basically, again, you look at a company, and when you look at a commodity like gold or silver, basically gold is gold. Once it's refined to 3/9 fine, I don't care if it comes from Pluto, I don't care if it comes from Mars, I don't care if it comes from South Africa or it comes from Canada. It's gold. So now what you need to do is evaluate the company from a perspective as who's making the most margins, who's got the most efficient operations, who's got the best reserves, the best management, and that type of thing. And that's how we approach it. I mean, when you take our report and look at it, we do what we consider like a bank analyst report. It's not something that you get from, let's say, some of the other newsletter writers that are very good storytellers, because a lot of these smaller stocks are what I call story stocks, and some of these stories are phenomenal. I mean, when you're having a drink with your buddies at the bar, I mean, some of these stories are just fantastic, but do they make you money? We're in the business to help people make money.
And David, obviously the place to find a lot of those money-making opportunities is right in your letter.
Yeah, the Morgan Report, yes it is.
Okay. Well, thank you very much for being with me today, and I'm sure that our viewers will benefit from the information that you've given them. So we look forward to seeing you again in the not too distant future.
Pleasure is all mine, Ted. Thank you.
From the offices of Investment Pitch for Ticker Talk, I'm Ted Ohashi.